What's up, everybody? Welcome back to DOY, Saya, disciple of Yahweh.Trades, basically, the community and everything. As you've seen in the last video, we just got done teaching you on market structure. So this is another confluence. I wouldn't even say, yeah, confluence that just goes hand in hand with market structure. This will be very, very, very important. So, like, I will genuinely highlight this, and I will tell y'all all the time inside the Discord, when you get to this video, really pay attention and really feel like you grasped it. I might even make 2 videos of this just to really drill it into y'all. This is like really important because this is going to be your everything for when you're taking your trades, whether if you taking a liquidity sweep, a liquidity run, or you taking a trade that you see it's going towards a liquidity area, right? So boom, let's go here, right? We understand market structure, right? Remember what I said: highs, lows, lows, and highs. We understand we're in an uptrend, but as we see here, even on the 15-minute time frame, what did I tell y'all? If you remember this is the same chart from when when I was teaching market structure, where I said I wouldn't have longed down here because when we came up, I don't see any aggression to take out this high, right? So boom, if we are still in an uptrend, if we're reversing, right, the market has to make a decision. It cannot just run like this, right? It can't just run sideways. And remember what I told you. It cannot run straight up or straight down, right? It's never going to look perfect. God, my fault. It can't run. We'll just draw next time. Yeah, it can't run straight up like this, and it can't run straight down like this, right? It has to, if it wants to go up, it has to pull it back a little bit, take out areas, and do what it has to do to continue climbing, right? It's not going to be perfect. If it's going down, to the downside, it's going to be doing the same thing, retracing back up to take out stuff like that. So what are we seeing here? We're not expecting that the uptrend is over, right? But with seeing how weak we got before we tried to turn around to this high, right, you may have entered long. But the reason why we don't want to enter long here is because when we broke out of here, we didn't break out with aggression. How do you see aggression? People use things like, I can show you this down here, like volume and stuff like that. Like, you can see volume over here. That will line up with a candle perfectly, and it'll show you, right? So volume basically just means how many people are in the charts at that time, are ordering, buying, selling, whatever, right? But we're not on volume right now. Volume it's kind of important, but not really. Like, I need y'all to understand liquidity really hard. So what is liquidity? Liquidity is basically an area, right? An area of what do we call it? You can say an area of importance, an area of, like, desire, whatever. Basically, it's just like a desired high, low, or fair value gap or something that basically is an agreement with the market. The big people who are moving a lot of money around in the market. You're a retail trader, so a bunch of retail traders, no matter what, right? It's an area, a point of interest, right? We are going to that area, or you expect that we are going to go to that area, or we need to, right? So the best trades are going to be a need to. How do you know if something is a need to? It's going to come with market experience of you doing this. So me not taking that long is because seeing that we were weak to go up here and break this high, the market needs orders, right? The market can make orders from a lot of different things, right? So this is a confluence you'll learn later on too. This is an order block, right? Order block, basically it just means, it says for value gap, but it's an order block, right? Order block is just basically saying this is where orders came in at, or orders are resting at. Why? Because we pivoted here. We tried to come down. We didn't attack these lows. We pivoted here. This may be an order block. So this could be a point of liquidity, right? A high or a low could be a point of liquidity because what we usually do is we either perform a liquidity run or a liquidity sweep, right? So a liquidity sweep is like this. Let's say this high got created. We come back down, make a higher low, and then we come back up to take this, right? We can either come back down and keep going, or we could, oh, it's still on there, sorry. Or we could come up, make that higher low, come out, take out this high, and then that triggers the reversal, right? Because what I told you, the market's never going to move in one direction the whole time. It's never going to do that. It can't just continuously go up. It can't continuously go down. So there are points where discount is happening. Discount is basically just like you going to the store and buying something that you wanted to buy when it was at a better price, right? Do I have my Phillips settings on there? No. My Phillips settings, I'm going to put them on probably for the next video. They look a lot better. So basically, let's say this is your interest, right? From Tuesday all the way, and we're at Wednesday right now. Price is at a very high area, so it's in premium. Premium just means we pumped a lot, right? We're just, if the price always ranges from like freaking a car, like say a car, the price always ranges from $26,000, which you can see this number right here on the right, $26,050 and $26,350, right? You're looking for that area to either buy it when it's down here or near down here, or to not buy it because it's all the way up here, right? So the market's always going to create new highs and new lows, but liquidity is when they are significant. So if it's significant, we're going to go for it, or we need to go for it. So in this area, why is this low significant right here? Either this low or this order block. Why is it significant? We don't have any fair value gaps, right? Our fair value gap is, I'm gonna teach that later. I need to focus on that when I focus on it, so I can teach y'all the whole thing about it, because there's a lot of different confluences with fair value gap. But boom, a fair value gap would have just basically told us, yeah, we really want to get out of here. Like, we broke out of this right here. We didn't break out of this with strength, and that's what I had told you. If somebody was long in this, it wouldn't be bad, but it wouldn't be good either, because look how it reversed on them so fast, right? But this low, you see we didn't take out this high. If we can't take out this high, we have to take out something else to be able to take out this high. The market is always telling the story. It's always going to go after something. So as we see right here, let's say you saw this happen. You didn't get into that buy move because now you're waiting for your favorite confluences. This is going to be your favorite confluence in fair value gap. Liquidity. It's everything when it comes to the market. The market needs liquidity to move. Why? Because the market needs people to press buy or to press sell, which is this, or to press sell to move. If no one's pressing buy or sell, the market moves like this, sideways. What did I tell you? It cannot do that unless it's crashed. This is the NASDAQ. It cannot crash unless the society crashes and we have another Great Depression, and we don't want to go through the Great Depression too. Hey, boom. Liquidity, right? Let me get back on topic. Liquidity. This low is now liquidity, right? We didn't break out of here hard, right? We consolidated this in this area, and then when we came back to it, we failed to break out of that area again. So if we want to continue higher, or if we want to go lower, which is going to determine, what did I say? Liquidity sweep. That means we take it out, and then we come back and sweep it again. Or our liquidity run. We're going to come up, and it's a run because, boom, we take out the high, which was this right here. We take out the high, and then we run the other way. That's what we needed, right? Boom. Easy. Easy, simple, right? What did we do here? We made this low. We failed to go take out that high. Now this is significant. Now you either want to see this come take out this and continue to short, or you want to see this come take out this and then what? Perform a liquidity sweep, which is sweeping this and then go another way. Boom. Right? Okay. Let's see what happens. Right? So now we're consolidating this area, but you'll see This low is marked out. On top of that, it's a session low. So sessions are when the banks are open in these areas or regions, right? So New York, this is basically standing for most of, around where you guys are probably going to be staying at if you're seeing these videos. Of course, Asia, London, all of that, right? So it's just split up into a few sessions. You got like Tokyo, people saying stuff like that, right? So that's a session low. So now this is a high point of interest in liquidity. This high would be a high point of interest in liquidity, but later on you'll understand that when you trade a lot more, is you'll see why this high isn't that serious or significant, because it didn't close above this high. So even if something happens here, you don't want to react until it takes out this one, because that's our nearest high, right? Boom. So what happened? We take out that low. Now, this is where the magic happens, especially in New York session, right? We didn't even hit 930 yet. So 930 is around the best time to trade, because all of the volume is going to be coming in. But as you can see, that low, we needed to take that out. So now we're going to be making a decision for 930, all right? Or during 930. So let's skip a little bit. All right, so we're at 924. We're going to drop this down to the 1 minute. Get a little closer to 930. That's 26. That's 28. 29. Now I'm going to drop this down to the 1 second, and I'm going to let it play out like it was in real hand, right? So basically how the market's going to actually move. You'll see how 930, the candle is usually a lot larger than the rest of these, right? If it consolidates, it doesn't have a point of interest, right? So let's just watch this. All right, boom. This is a couple seconds into the 930 open. You see we came down, took out that low again, and now we got to make a decision. Our point of liquidity was this low, so you could have took that reversal here and this huge candle here indicating, yeah, it wants to take out this low before it continues to take out this high, or it wants to take out this low if it wants to continue down and flip this from a uptrend to a downtrend. Because we're in a high time frame uptrend, you don't really expect it to shift that hard, right? Especially seeing how weak we are taking out these lows. But you see how liquidity react or works. See how we had this low again that was below the liquidity point. Now that could have been another point of liquidity. And what did 930 do? It came and took it out. There's people who trade every different type of ways. There's people who probably would have took this. They probably would have took this, and they genuinely bank off of trades like this, and they make their money. Look, that's a nice 1 to 3, right? Most traders aren't going to do that. They're not going to gamble the market open because it's very volatile. You could get in here, it can be up here, and then in half a second, it could be taking you out. But indicating we're in a heavy uptrend, that's not really a bad trade. You can't tell someone that their trade is bad. You'll see that a lot in this community though. People love to hate, but you can't tell someone that their trade is bad if it works for them, right? So let me speed this up now, because I don't want it to be extremely long, right? So boom. Now it's moving at the 3 minute time frame. So now you see this point of interest, this liquidity. We keep ranging around here until we make a decision, right? So on your time frame, which is the 1 minute we're looking at, it looks pretty nasty. We don't like it. It's consolidated, right? But on the higher time frame, it's telling us a story. What is it telling us? 15 minute. It's looking like this was the area where we failed at. Let's see if we had something else, if this was another liquidity. Oh, nah, this was all-time highs, I think. Yeah. So all-time highs is a different way to trade. You have no, it's not all-time highs. All-time highs is right here. Alright, boom. So yeah, we're near all-time highs. It probably wants to go take it out, but we don't know what it wants to do yet because it keeps moving too slow. But if we want to take out all-time highs, that's why liquidity is important, because it's either we take out the low that we just did, take out that low and then continue up, or we want to touch areas of liquidity. So areas of liquidity versus highs and lows of liquidity. is your fair value gaps like this. That's an area of liquidity. Your order blocks, like let's see, like this. This is an order block. It's where we made our indecisive candle at before we fell. Or this is an order block. Yeah, this is a perfect order block actually. It's where we first started pivoting at. We took out this low. When it took out this low, it bounced back up, touched into that area of liquidity, which is order block, and gone. Right? So how you're probably thinking is, dang, like it's a lot of stuff going on. How am I supposed to get this perfect to trade or whatnot? You don't need to be perfect, right? You need to be on the right side, and you need to be taking what's the name? An important area. Hold on, my wife calling me. You need to be taking an important area, a good entry, and you need to understand that you're gonna lose, and when you lose, who cares, right? You see that what this says, previous daily high. That's an area of liquidity. So let's say someone had that marked out, and they had this low marked out. This low was their trigger to want to catch continuation shorts. And how did they find that? Let's see what entry they could have took. I don't like the 5 minute or anything like that. Okay, boom. They bounced back above this. They inversed this gap. Let's say they took the entry off the inverse of this gap. What's a trade without a drawdown? Alright, so they inversed this gap. They had their stop above the highs. They're targeting previous day low. Previous daily high. Let's see, where is that? Previous daily high, which is right here. And boom, they got them a 1 to 2. Did they have a little bit of drawdown? Yeah. They entered the trade maybe over here. It came up. It didn't take them out, and then it ran in their favor. And then boom, smack full TP. But that's why liquidity is very important, because liquidity is going to give you your bias, and it's most likely going to give you your trade. Your entry is going to be off of your other small confluences, which is like fair value gaps, what we're going over next. But liquidity is going to give you your direction. And if you're in the wrong direction, it doesn't matter if you have the best entry ever. Let's say you got we're on the 15 minute. Let's go 3 minute. Let's say you got the best entry ever, and you think, let's see. Yeah, this right here. People like this type of like this type of entry. We swept the low. Again, they inversed the gap and they pushed up pretty strong. It doesn't matter. It was a nice entry. I wouldn't be mad at somebody for taking this trade, because it does make sense. That's all you wanted to do. You wanted to make sense, and when you lose, you want to just, instead of revenge trading, go find out why your loss makes sense, right? Because if your trade to win makes sense, your loss has to make sense too. And sometimes it will be something crazy where you feel like, dang, like how am I even supposed to do that? Because I don't know if you've seen lately, if you've been trading, Trump, he has a very big influence on the market. So him just tweeting something, it will change your odds in the trade significantly. No cooking. But my wife is here, so I'll get to the next video in a second. That is liquidity. Focus on your draws and liquidity, and your trades will be pretty much smooth, or not too bad. Have a blessed day, blessed evening, and remember, Jesus loves you.